Morning, everyone. Welcome to MPC Markets Morning Call for the 30th of July 2025. I'm Mark Gardner. Stocks took a breather overnight as the Fed and MAG7 earnings really looming over the market. There was a couple of other bits and pieces that sort of added to the negativity. There's a lack of progress with the US-China trade talks, although, it's pretty standard. We had President Trump sell it as a win, but there's really not a lot of progress. It's at a fairly pivotal juncture, and then there was a few threats overnight as well against Russia, which saw oil prices head higher as well. So, and then also add to this an absolutely horrible night of earnings. Nearly all of the headliners overnight fell. Down 1.5% was a good result, albeit for Starbucks, who was up nearly 4%. But the drug makers and really just about everyone across the board taking a hit overnight and missing earnings. So I'm going to start with the commodities because there's a lot to unpack with the stocks overall. So gold drifted, silver was largely unchanged, copper was off a little bit. As you can see there, crude was up quite considerably. That's more so Brent crude than the US crude. Iron ore still making ground, up 2.5%. That's probably going to be the saviour of the Aussie market today, I would expect. So back towards those, back towards those highs in a way. Probably only, I'd say 0.5% from those recent highs. Lithium took a massive hit, but it has had a fairly extraordinary run in recent times. Uranium took a bit of a hit as well. Boss Energy really the bad apple. Ruining the whole cart there with a horrible production number a couple of days ago is really pinning down that uranium sector. So any form of buoyancy just derailed by, I'm not going to say poor corporate governance, but to miss by as much as they've missed by and to drop under $2 is quite extraordinary. Probably a buy around here at the moment, but look, the short sellers, Paladin and Boss Energy, the two most shorted stocks on the ASX, the shorters are just deep in control here at the moment. You would expect to try and buy some back because this is bargain basement prices here at the moment, particularly when you've got the likes of Cameco, who is one of the biggest, if not the biggest in the world in production. If I were them, I'd be licking my lips and looking at probably buying, these guys at considering the premium valuation that Cameco has versus the effectively in the toilet valuations that the Australian market has. But Aussie dollar drifted off as well. We do have Aussie CPI today at 11:30. It's only the monthly number. I dare say the only way you'll hear about it is if it backs up a rate cut argument, so the press and the pundits can get back on just bashing the RBA and the Reserve Bank governor. If it's higher than expected, I'm pretty sure it'll end up being a footnote in the Fin Review or, most of the news channels overall. It seems to be the way of things, but the monthly number is not really the one that the RBA prefers to watch. Bitcoin drifted off as well, US dollar slightly higher. Shifting over now to the heat map. As you can see there, we've got Nvidia down less than 1%, Apple down 1.3%, Meta down 2.4% into earnings, Amazon down nearly 0.75%. Microsoft unchanged, Google up 1.65%. There are some really deep red spots in this heat map here today. You've got particularly in the healthcare sector, Eli Lilly dropped 5 and a bit percent. Merck, drug company, which just broad vaccines, etc. They announced they'll save $3 billion a year, cutting jobs, and lowered its second quarter guidance due to continuing weakened demand for the Gardner vaccine in China. So it was down 1.7%. So Merck was the good one So we'll go on now to United Health, which has just been absolutely battered and bruised in the last 12 months or 6 months particularly. They reinstated full-year profit forecast that it pulled 2 months ago, but its guidance still fell short of analysts' already lowered expectations. It was down 7.3%. That is a massive fall from grace for that company, and they've still got Department of Justice subpoenas, etc. Employees having to testify. It is a massive avoid there for the moment. I think it is probably United Health's probably one of those companies that's too big to fail. However, I think you can definitely wait until a few of these subpoenas have been served, etc., because it will offer value at some juncture. Just their infrastructure alone, I'm sure this thing would be trading at below its asset value. But it just goes from bad to worse for that company. Just when you think it couldn't go any lower, it lowered the bar. Novo Nordisk, not on this heat map, but down 22%. Stock slumped as the weight loss drug Wegovy warned that full-year sales and operating profit would grow less than previously expected, cutting its forecast. That was just the healthcare sector. United Parcel Service dropped 10%. Broad decline in second quarter profit and revenue. Some people regard as a bit of a bellwether for obviously the e-commerce economy, which obviously you could actually add PayPal to this, which was down 9% overnight, guided to current profit quarter that was roughly flat from a year earlier. Raised its full year profit forecast, but not enough to satisfy the analysts overall. Spotify guided current quarter earnings below analyst estimates and flagged the negative impact of currency effects and elevated payroll expenses. And then Whirlpool, which does home appliances, they had a disappointing second quarter result, slashed their 2025 full year guidance and dropped 14%. As I said, Starbucks was the only real positive I could find, and Procter and Gamble did report last night. It was down 0.5%. But yeah, overall, that's probably one of the worst days of earnings I've seen in quite some time, and just broad. I mean, you've got online, very scalable blue sky businesses, healthcare to delivery businesses to payment services businesses. I think Visa reported last night was down 1.5% as well, so not as bad as PayPal. But I had to obviously pick the headlines this morning. There was a lot going on, and it was a horror show, if I'm going to be frank. So not going as well as usual. Usually you're getting well above the 80% mark and beating in the top and bottom lines. I believe we're at 67%, beating on the 67% beats on the top line revenue, and then over 80% for the EPS beats. But that last night's not going to help in any way, shape, or form, I wouldn't have thought. So, but we do have some of the big guns reporting over the next 2 days. Microsoft and Meta tomorrow. Microsoft priced at a bit of a premium. They are sort of regarded as the AI leader at the moment. Meta, I don't know why, but it doesn't tend to get great. No matter what it does, because Zuckerberg's a little bit, same as Block, for instance, both got founders that are probably a little bit too future thinking, which is not great for quarterly earnings and doesn't really help in terms of giving the picture for what the analysts want. I mean, it doesn't mean that they're not great companies. It just means it's a little bit harder to work it out. And as per most analysts, they would tend to take the lazy option. So Qualcomm will be out as well. MasterCard, I probably won't be expecting much out of them after Visa and PayPal overall. And So that is a very large chunk of the market cap of the S&P 500. Apple and Amazon the following day. We have CPI here today, as I mentioned, advanced GDP in the States tonight, which will be the one that's quite volatile overall. But all eyes will largely be on the FOMC meeting. That will come out Thursday or tomorrow morning around about 4 a.m. and then the press conference about 4:30 a.m. Bank of Canada will be tonight, and I don't see there being too much activity. There hasn't really been in much of the press. The Bank of Japan meeting might show, might see some movement in the Asian session overall, but they sort of, they walk to the drum of their own beat, the beat of their own drum, sorry. Core PCE on Thursday night, that's the Fed's inflation, and then employment on the Friday night. They're not expecting the Fed to move rates. It's Fed Powell's opportunity to, kind of stick it to Donald Trump, because he knows he can't get fired. After President Trump sprung that ridiculous construction inspection and started playing with, imaginary numbers on the budget, which you all saw if you were listening or watching the podcast on previous days. One that's in their Coinbase on the Thursday, I would imagine it would report after the bell. I maybe don't mind the look of that. It is priced at an extraordinary premium, but we have seen the Genius Act go through, and like crypto's at record highs. We've seen broking operations and trading volumes be sort of generally at record highs. There's been a bit of a pattern over this earnings season as well. So that one might be one to look out for, although it is as most crypto is, or crypto-related things are, at eye-watering valuations at the moment. Then we've got some of the oil companies on Friday. Berkshire Hathaway doesn't report till over the weekend, so the market will get its first chance to react to those on Monday. But I would imagine with what's called the Shiller PE, which is the average S&P 500 PE on a forward growth basis, nearly at record highs. Hasn't been this high since the tech bubble. I can't imagine that Warren and Berkshire Hathaway are going to be in anything more than a hell of a lot of cash, I wouldn't imagine. So, and I did promise yesterday we would have a look at some seasonality in the S&P 500 with the average monthly returns, just so you sort of get a gauge around. I look, the way that the algorithmic trading systems work these days, these sorts of seasonalities are more and more prevalent as time goes on. This one's from June this year. I think in July we had roughly about that 1.5%, so that's around about on par. But as you can sort of see here, August is probably going to be your opportunity, albeit there'll be some form of buoyancy. And I'm not 100% there necessarily will be. Trump's already threatening Russia. The China deal hasn't gone through. I think everyone's pricing in things to absolute perfection. And as I said, I really haven't seen a night of earnings with such broad weakness in quite some time. So that's going to start to weigh on things overall. All we need is a couple of these MAG7s stocks to start looking a little bit grim, and then that can quickly turn around because of the concentration risk. I think Nvidia certainly will be the flagpole, and I can't see it upsetting the apple cart. But given all the forward orders and the results from TSMC, etc. But you may see some disappointing results outside of that potentially, which could lead into August. But what we're thinking here at MPC is, early August is going to be a great opportunity probably to lighten the load a little bit, go to some more defensive names, because I don't really see this market hanging in there until September. We have weathered the storm of trade wars, of erratic policy changes. We've got tariffs. We've had the US bomb a sovereign nation in Iran. Russia, Ukraine is now starting to heat up again because Trump's obviously deflecting from something. But he's starting to threaten Putin, which is not the smartest of ideas. He still hasn't got a trade deal with China. We've only got about 5 trade deals overall. So these tariffs are going to start filtering through, and he's just not going to be able to sell another 90-day delay to tariffs overall. So yeah, and there's more. Not that it's not our go here to be worried about things like the Epstein files, but there is a lot of pressure on him there as well. Something may come of that on top, which will then heighten political pressure for him to be impeached. We've got debt ceiling coming up as well, and I believe we still have one of the. I think we've got the TikTok divestment coming up. So look, there's still a lot of issues out there, and so yeah, we'll probably be erring on the side of selling into this maybe for the next couple of weeks and taking opportunistic hit and runs here and there, probably more than likely through the global alpha. Although, given last night's results, we probably will have to tread very carefully because it definitely wasn't a good one. So, but I think for the ASX today, I think we'll just hang in there. Iron ore was up. The lithium stocks will probably take a hit. Before the bell, Atlas Arteria, Champion Iron, Pilbara Minerals, Mineral Resources release updates. Rio set to release earnings after the bell because they're on the London Exchange, and really, I suppose we'll be watching that CPI data, and everyone will be holding their breath until we get. It'll be first up Fed Powell at 4:30 in the morning, and then that will lead into the mega caps giving their earnings results after the bell. So yeah, I think Microsoft's got a very high bar to reach, and we and it is sitting at quite expensive levels. So I wouldn't be surprised to see that beat expectations and then actually maybe peel off a little bit. I did a comparison against the other sort of cloud services companies like AWS and Google this morning, and it's very rare, but Microsoft's actually trading at the highest premium as it stands at the moment. So it'll be interesting to see how that plays out overall. But yeah, anyway, that's just a little bit extra there for you today. It's just to give you a bit of an insight into what I was thinking about the seasonals. So hopefully everyone enjoys their day, and hopefully, fingers crossed, we see Rio Tinto give a nice juicy dividend, which will give the Aussie miners a bit more of a lift, and onwards and upwards for the Aussie earnings season, which starts in the middle of August. Proper around about the week of the 14th is when it really starts to heat up, but we'll have intermittent earnings over the next couple of weeks as things get going overall. So enjoy your day, and we will speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.